Hello, everyone. This is Lisa. Thanks for watching my YouTube video. I have a guest speaker today. His name is Elijah Young, and he is with Elijah. Go ahead, tell us a little bit background of your company.
I am with Fairway Independent Mortgage. We're the #1 purchase lender here in the state of Arizona. Very prideful with service, speed, and definitely focusing on the clients at all times.
Awesome. And I know that you are almost born and raised here in Arizona. You were in North Carolina for the first 10 years, but you've been here in Arizona for quite a while. And you have 14 years in the banking industry and then 4.5 years as a loan officer. Is that right?
That is correct. Yeah, extensive background in lending, retail banking, all that great stuff, credit, and took my move over to lending in terms of mortgages just a few years ago. Love what I do. It's an amazing experience to help people get into homes, and the skills were very transferable, and it's been a blessing.
Awesome. Well, today we're going to talk about, can you buy a home with zero money down? So with that, we are going to answer that question, but talk to us. I know there's a program out there called Home Plus Mortgage Program. Tell us a little bit about that.
Yes, the Home Plus program is for homeowners out there that don't have a ton of money to get into a home. And so they are down payment assistance programs is what we call them in our realm of things. And honestly, that's what it's there for. It's there to help you get into a home, knowing that the larger portion of what it's going to take to get into a home is the down payment. Nowadays, you're looking at a 3% down payment for conventional homes, a 3.5% down on FHA loans, and with housing prices going through the roof, you kind of see where that down payment can go. And so these programs are set up to help eliminate that pressure and that stress in terms of getting into a home, so that home buyers are able to do so. And we call them affordable housing programs as well. So there's a lot of interchangeable things about them, but very, very helpful to help any homeowner that's looking to buy a home.
What are the parameters of let's say I'm a first-time home buyer or a home buyer. I haven't bought a home for, I really haven't bought a home for almost 30 years, but what do I need to do to qualify for this program? What qualifications are you looking for from a potential home purchase person?
Yeah, definitely. There's not really a huge barrier to entry, since it is to help people get into homes. The biggest thing is first, not currently being a homeowner, so you can't own another home right now. These programs aren't built to help you build your real estate portfolio as much as they are to help you get into a home. And so owning a home is a no-no. The second thing is just your credit score. Really, they set a minimum credit score threshold in order to get into the program. And so once you meet that threshold, you're able to use their programs. There are different intricacies within the program to allow you to use different sections of it that suit you best, whether it's a conventional loan, whether it's an FHA loan. They do have options for VA, USDA, and then there are some breakdowns in terms of how the conventional works, depending on what your income looks like as well. So there are some income thresholds, but I've not run into too many people that have gone over them in terms of being able to use the assistance. So it does come down to some varying factors, but ultimately the main one is your credit score.
Okay, and what kind of credit score am I going to need to bring to the table?
So your minimum credit score requirement is a 640 FICO. And as a lender, we pull all 3 credit bureaus and we use the middle score. So you could have one higher, you could have one lower. As long as your middle score is over that 640 threshold, you're able to qualify.
Awesome. And then, so let's say I use a down payment assistance program, the Home Plus Mortgage Program. Let's say I qualify for that because my credit score is high enough. When and how do I pay that back?
Well, that's great that you asked that, because you actually don't have to pay it back.
What?
No, not at all. What we do in the program is we provide a second lien on the home. And what that entails is however much money you receive in assistance, the program puts a second lien on the home for that exact amount. So say you use $12,000 to get into a home for your down payment. The program attaches that lien to the home. It's called a silent second. There's no payment that's ever due. There's no interest that's ever accrued. And after 3 years of being in the home, the lien is taken off of the home. So you don't ever have to pay it back. And so if for any reason throughout the term of the loan, say within the first year and a half, you find this amazing job and you've got to move out of state and you have to sell the home. Well, the great news is if you have to sell the home and you've been in there for at least, a few months already, the balance that was on the second lien, it actually reduces by 1/36 every month throughout that process. So if you get to month 35 and you need to move, then you repay 1 month of what was borrowed. So essentially, most people within the program, you buy a home, you're excited, you're going to live in there at least 4, 5, 6 years, and you never notice the difference. So the biggest thing is, as long as you're not refinancing or you're not selling your home before that 36th month is up, you don't owe $1 to the program.
Well, let me ask you this, and hopefully you know the answer to these questions, but one is, how long have these down payment assistance programs been in existence? That's one question. And two, do a lot of your clients know about this, or are you the one that lets them know about these things? Do they come to you and say, hey, what about that down payment assistance program? Can I qualify for that? Or do you educate them on it? I'm just kind of interested in knowing that.
Of course, I can't tell you the specific tenure of these programs. All I know is they've been here for longer than I've been around in the industry, and they'll be here well beyond that. I've heard of them when I was back in banking, and they've been around for years and years and years, because affordable housing has always and will always be a focus of what we're doing within our communities and within the counties and the jurisdictions of Arizona to make sure that people are able to get into homes. So I don't know the tenure exactly, but again, they're not programs that are being taken off the shelf. They're not going away. If that's kind of what we're leading into, these programs are fully funded and continually funded to allow people to get into homes. And so there's no issues there. Secondly, as far as the education around the programs, a lot of times I do have to be the one to educate my clients about them. They hear about them. They don't really understand how they work. They don't really know what they're called. So they don't, take the time to go and research it to be able to figure out exactly, what the intricacies are of it. But ultimately, I do come down to being the educator about it. And even when I do have clients that come in that have money for their down payment, sometimes we convert over to a down payment assistance program because it's more beneficial to them. We know, being in real estate, that a lot of families, there are going to be a lot of expenditures once you get into a home, whether it's painting, changing the carpet, buying dishes, furniture, whatever it might be. That expense comes in pretty quick. And so when you use all of your money to get into a home, and now you move into a home and you can't put anything in it. And so sometimes the down payment assistance programs are a better option for even clients that have saved their money. So it does depend on each individual's circumstance, but essentially that's something that I do as a lender. I do provide them those options to say, hey, is this a better choice for you? If not, then let's keep doing what you were already doing.
Right. How do I qualify for this program?
It's fairly simple. For us as a lender, all we do is we pull credit. And secondly, we review income, make sure we can fit you in the right portion of the program. And then from there, it really is that simple. There's really nothing, again, there's no huge barrier to entry. And then from there, we kind of choose, what part of the program works best for you.
Is there a debt to income ratio I need to fall under?
Most of these programs do follow the normal guidelines around debt to income ratio, and most of them do go up to about 50% of the DTI ratio, which is what you'll see on a normal Fannie Mae, Freddie Mac, FHA loan as well.
Is there a maximum income level that I have to be under to qualify for this program?
There are two sections of it for conventional. You have one section that's called, it is over 80% of the area median income. And then there's another section that would be for anyone who's under 80% of the area median income. The difference between the two programs, you'll see varying interest rates provided for the program of those two options. And then on FHA, the FHA limit is $109,000 in income. So it's pretty high to kind of fit into that, but I've not seen too many people surpass that on the FHA guideline.
Okay, great. So that sounds like an amazing program. Is there another program that can also, buyers can qualify for that's maybe a little bit different than this one?
We have the Home in 5 program as well. It is similarly based exactly on this premise of how the Home Plus program is made. The credit score requirement is the same. The income thresholds are the same. And you're looking at in terms of how Home in 5 is structured, it's only for Maricopa County.
Oh,
So
okay.
that's really just the difference of the two. The Home Plus program is for all of Arizona and can be used across the whole great state of Arizona, whereas Home in 5 is structured just for Maricopa County.
So everything else is pretty much the same, all the same qualifications?
Yep. Yeah, you look at everything, the debt to income requirements, the credit score requirements, the income requirements, they have the same thresholds across the board.
All right. Any other programs that our viewers should be aware of?
Yeah, of course. Since we have the great programs here in Maricopa County, we've got the Home Plus for really all of Arizona. There is another program down in Tucson. It's a Pima Tucson IDA program. It's similar to this one as well. Allows you to get enough money to cover your down payment and get you the assistance to get into a home. The program has some small different things. I don't use it a ton, I'll be honest with that. But again, the programs do work similarly.
Awesome. Let me ask you a quick question. I'm going to limit you to one, maybe I'll give you two, but what would you say is the biggest obstacle or barrier for your clients getting a qualifying for a mortgage? What would you say? Like I said, I give you what's your biggest one, and then I'll go ahead and give you what's your second biggest one that they kind of trips them up and maybe has them kind of have to delay or work on something before they can get a mortgage from a lender such as yourself.
Sure. In all honesty, the biggest thing that I run into with clients, I know it's the two things we've already spoken about within these programs, but the one I usually run into is actually the debt to income ratio.
Oh, really?
I've got a lot of clients. Yeah, I've got a lot of clients that are credit qualified, and then we go to show them, hey, you know what can you afford? And again, with that rising housing prices and such, everyone does carry some sort of debt load. And so when we go to run the numbers for the debt to income ratio, that's when we really get a little tight, because a simple car payment or two car payments can really throw that off, completely. And when you go to rent an apartment or you go to rent a home, excuse me, you don't get that evaluation. So they don't ask you what your debt to income ratio is when you go to buy a car, when you go to rent something.
Right.
And so people just think I can afford it. And so when I go to give them the reality of what that threshold looks like on our guidelines, a lot of times that's really the biggest thing, is what holds a lot of people back.
Interesting. Okay, then I'm going to give you number two, just because I'm hoping that it's what I was thinking is the answer. So what would be the next thing that trips people up when they're trying to buy a home?
They just don't know where to start. Honestly, when it comes to working with mortgages, a lot of people don't understand how they work. And speaking to a real estate agent like yourself, they start to get the insight, and they start to try to figure out what it's like. But ideally, there's a lot of education that goes on. And when working with a lot of first-time home buyers, it comes down to them understanding what the process is, what the measurements are that we take, and they scare themselves away. I guess you call it cold feet, or the fear of knowing. And so really, when it comes down to it, it's those two things. It's DTI, and then really not knowing what to expect. And obviously being in this industry, educating people and being able to be a resource to them and be an expert in the field is really what I enjoy.
All right, well, I'm going to give my guess, because your first two answers still weren't what I was going to say. So I'm going to throw this one out there, and then I'll let you talk about it. But my guess was going to be credit score.
Credit score is a big one. Yeah. And those are the top three. We were almost there. We were almost there.
I started to get a little worried. I'm like, well, maybe I'm in the wrong industry. I can't get this answer right.
Yeah, well, that's the thing too. Yeah, credit scores are huge. The biggest thing that we think about now is we're allowed to go down to 580 on a credit score to get into a home. I know your eyes just pop open, because it's like, that's not the greatest credit score.
Right, because I think my two dogs that are lying here right now, I think one of them, I'm pretty sure one of them has 580. So.
Yeah, 580 is actually the minimum credit score requirement to get into an FHA loan. And so
Wow.
It puts people in a position where you can have a semi low score and still get into something. And obviously there's different risk layers and different things we need to do to ensure that person's approved. But ultimately, this credit score requirement, it isn't as high as people think it is. And again, when we look at moving into down payment assistance, it's at 640. So a lot of times when I do talk to clients and they're, at 580, 600, and they're like, oh, I can't get a home. I run credit simulations for people all the time. I mean, let them know what it takes to get to 640, whether it's 2 months, 6 months, 12 months, but at least they have a plan. And at the end of the day, if they follow that plan, they can be a homeowner at that time. And so essentially, it does take a lot of effort on behalf of the borrowers and to be able to put the work in and the discipline to get their credit scores up. But as a mortgage professional and yourself in real estate, we're here to build that plan and work with them through it so that they can become a homeowner. And
Right.
Essentially, at the end of the day, it comes down to let's pull your credit and see what it looks like, and let's build a plan. I've had so many clients that, oh, I think I'm in the low sixes, and they come in at 645, and we're using a down payment assistance program, and they're buying a house in 30 days.
Awesome. So $1 million question. We've gone through the specifics of the programs, helped educate our viewers. $1 million question that we started this video with was, so can someone buy a home with 0 down? And the answer is
Yes, they can.
yes, they can. Well, awesome, Elijah. Thank you so much for your time and your expertise. And if you guys have any questions or need anything, subscribe to the channel below. If there's anything we can do to help, Elijah and I are always here, and we will always be here for you. So with that, thank you so much and have an awesome day.
Thank you, Lisa.